We've all heard the classic advice, just buy VOO or SCHD and hold forever. But what if I told you there are ETFs out there that could double those returns, if you're okay with a bit more risk? I remember checking my quarterly statement and realizing my diversified ETF strategy had outperformed the S&P 500 by 8%. Today, I'll show you 6 underrated ETFs targeting high-growth sectors and reveal the one that returned 97% over the past 5 years. Stick around to learn how to balance these funds for growth without blowing up your portfolio. Why go beyond traditional ETFs? Broad market ETFs like VOO buy everything, great companies and average ones. That means they can miss opportunities in fast-growing industries. The 6 ETFs I'll show you target specific technologies and trends that regular index funds just don't reach. 1. ARK Innovation ETF ARKK, the Innovation Mothership. Focuses on disruptive innovation, genomics, AI, fintech, robotics, managed by Cathie Wood, High Active Research, Notable Holdings, Tesla, Roku, Zoom. High volatility, but potential for huge gains, 152% in 2020. Expense ratio, 0.75%, yield, 0.3% too. Global X Cloud Computing ETF, CLOU targets cloud infrastructure and services. Includes Shopify, Twilio, MongoDB, positioned for the AI plus cloud boom. Expense ratio, 0.68%, yield, 0.2% 3. Global X Robotics and AI ETF, BOTZ, Automation Accelerator, invests in robotics, automation and AI software. Top holdings, NVIDIA, Intuitive Surgical, ABB, robotics market growing 15 to 20% annually. Expense ratio, 0.68%, yield, 0.5% 4. Amplified Transformational Data Sharing ETF, BLOK, focuses on blockchain companies, not crypto coins. Includes Coinbase, Blocksquare, MicroStrategy. Expense ratio, 0.71%. Yield, 0.7% 5. First Trust Clean Edge Green Energy ETF, QCLN, clean energy, solar, EVs, storage. Holdings, Tesla, Enphase, Albemarle. Returned 84% in 2020 during clean energy surge. Expense ratio, 0.58%. Yield, 0.4% 6. Wisdom Tree Cloud Computing ETF, WCLD, pure cloud software focus, SaaS leaders only, revenue growth of 30 to 50% yearly, returned 97% since inception. Expense ratio, 0.45%, yield, 0.1%. Before jumping in, consider high volatility. Some ETFs dropped 50 to 70% during 2022, visit as 20% for S&P 500. Sector concentration, one bad trend can drag returns. Higher expense ratios. ARK is 25 times more expensive than VOO. I recommend a 5 to 7 year investment horizon to ride out the bumps and catch long-term trends. These ETFs give you powerful exposure to emerging tech, but if you want specific stock picks, click the next video to discover 5 overlooked AI stocks that could explode in 2025 before Wall Street catches on.